Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. One of the main highlight of last week was that the Fed chairman, Mr. Powell, said that the Fed is not in a hurry to cut interest rate. Similar kind of statement he said in April 2021, where he said that inflation is in a transitory note. We defer at that point of time also that inflation will not be transitory. Probably on this statement also we are deferring that do not need to cut interest rate. Let us understand why in today's presentation. So the reason number one is US debt. US debt is currently close to $36 trillion. In 1960, US debt to GDP ratio was close to 52%. Currently, today it is close to 122%. The second problem with US debt is that between 1965 to 1970, when US was increasing debt by $1, it used to increase their GDP close to $8. Today, the ratio has changed drastically lower. $1 of debt is only increasing their GDP by 0.58 dollars. Now we have to understand why debt is rising higher. डेट तभी बढ़ता है जब आपका इनकम कम है, खर्चा ज्यादा है, आमदनी अठन्नी, खर्चा रुपया. इन केस ऑफ यूएस डेट इज दैट प्रोवर्ब होल्ड्स ट्रू. अगर आप रेवेन्यू देखेंगे, उनका रेवेन्यू इज क्लोज टू 4.92 ट्रिलियन एंड देयर एक्सपेंडिचर इज क्लोज टू 6.20 or 6.75 trillion dollars. Now, one more interesting factor is amount of money they are paying on interest. Interest जो amount pay कर रहे हैं, that is close to $1 trillion. Similar amount of money they are spending on their Medicare and defense. Now, in order to reduce the interest payment, one of the objective or one of the steps what the Fed can do is that they have to go and reduce the interest rate. Second reason why we feel that Federal Bank has to go and cut interest rate is as US banks losses are increasing drastically, their debt related losses are amounting to $750 billion, which is 7 times more than 2008. Another interesting point is out of that $750 billion, Bank of America का जो debt product पे losses है, that is close to $116 billion. If Fed do not go and cut interest rate aggressively, this losses will keep on increasing, and probably this can be a turning point where the debt related issue can trigger a sell-off in US equity market also. And the third reason is US household savings has reduced drastically in last couple of years. In 2004, it has turned into a negative territory. If savings are less, consumption will be less, consumption will be less, growth will be less. So one of the option what Fed will have is go and cut interest rate. Now let us see what impact it can have on dollar index. On a longer frame, dollar index should go and correct drastically if Fed goes and cut interest rate. In the shorter frame, the charts are telling us that 107 is going to act as a strong resistance for dollar index, and probably dollar index is likely to move towards 104.50 kind of levels, which will be positive for euro, pound and other emerging market currency. Now let us discuss outlook on rupee. In last couple of weeks, there were few concerns for rupee. First concern was FII had sold close to 13 billion in Indian equity market in the month of October and November. Second, dollar index moved up from 100 level to 106.50 levels. Third, US Treasury yield were also moving higher. Going forward, there are few signs which are indicating that rupee might get top near 84.50 kind of levels and might move towards 84.20 kind of level. That is our first target. If that level is also breached, then probably we can move towards 83.85 kind of levels. Let us understand why. The first reason is that dollar index is going to face a strong resistance near 107 kind of levels, and on Friday USD JPY got stronger by 1.22%, indicating a first sign of reversal in dollar strength. Second reason is India's two important import components are oil and gold, which are under pressure from last few trading sessions, indicating that our trade deficit might not increase significantly in coming days. With Trump getting re-elected, geopolitical tension in Houthis and Hamas have got de-escalated to an extent, and probably we might get some positive news about Russia and Ukraine also. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Most of them are taking costing near 84.30 to 84.40 kind of levels. We will suggest them that they should cover 100% on a back-to-back basis. If someone wants to wait, they can keep a strict stop loss of 84.35 kind of a level or costing, whichever is higher. For thick margin exporters like textile exporters or engineering exporters, we will continue to suggest them that they should maintain a 60 to 65% of the hedge ratio if they are covering under anticipation basis. If they are covering under confirm order basis, they can keep a ratio of 75 to 80%. In order to cover or in order to reach that ratio, they can participate near 84.35 to 84.40 kind of levels. Now let us discuss strategy for importers. Importers can keep a stop loss of 84.50 kind of levels and wait for a lower level of 84.20. At 84.20, we need to reassess ourselves whether rupee can move towards 83.85 or not. If in case 84.50 is broken and rupee moves beyond 84.55 kind of levels, in that case we will suggest importers that they can go and cover 30% of import payable which are due for next 15 days. With this I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.